Hey everyone, welcome to another video on Firstock. My name is Saketh, and today in this video, I'm going to talk about something which has been bothering me for quite a while. So when you take a look at it, market generally has a tendency to head upwards. So Nifty, when it started somewhere around 1990s, was at 1000, and today we have hit around 26,000. Sensex also on the other hand started somewhere during 1970s and 80s, and today it is somewhere close to around 84,000. Since the market has a tendency to head upwards, what actually happens if we simply end up buying a call option on the beginning of every single month? So one thing which I would like to say is whatever I'm going to share in this video is not any kind of recommendation, that I want to make it clear upfront. So we are just going to explore a simple thought process, what is the result behind that thought process, and how exactly things have played out. So I'm again making it clear, with this, I'm also not recommending you to try this out on your trading account. This is purely for educational purpose, and let's get started with the video. So right over here, I have opened the Firstock trading terminal, and this is the chart of Nifty. So you can just get a quick overview of how Nifty has performed throughout the day and also its P/PB ratio right over here. So what I'm going to do now is expand the chart of Nifty, and let's change this to candlestick, and let's put for 3 years. So you can see over the last 3 years Nifty has gone up around 43%. In the last 5 years Nifty has almost doubled, where it has gone up nearly close to around 121%. And when I put a max chart, so the chart here comes from 2010, you can see that Nifty has surged almost close to around 400%. So it generally looks like Nifty is in a steady uptrend. When you take a look at this, it does look like that Nifty is in a steady uptrend and it has a tendency to do well. Now the question is, if you end up buying a month-end call option in the beginning of every single month, what is going to be the result? To explore this, let's go to the option chain and try to get a sense. So let's try to explore today. If I were to buy a ATM call option of month end, so what is going to be the price? So since the contracts have started today, so it is going to be a good estimate for us. So right now the VIX, India VIX, is somewhere trading close to around 10.5, and at 10.5, if you take a look at any ATM option, it is trading around 380 rupees. So that is almost close to around 1.75% of Nifty. So if I end up buying this call option, paying 1.75% of Nifty and just leave it as it is, am I actually going to end in profit? Does Nifty really have the potential to deliver more than 1.7% every single month and ensure that I get into profit? So that is something which we are going to explore. Alongside, we are also going to explore one more thing in case if I end up doing a short straddle. So if you take a look at it, the overall short straddle price right over here is close to around 600 rupees. So if I create a short straddle, what is going to be the result? So when I open the option chain and take a look at the ATM call option, so the ATM call option in Nifty is trading close to around 377 rupees, which is almost around 1.6% of Nifty. This means every single month, if I go and buy this option, that means Nifty should at least move 1.6% for me to actually get into profits. So has Nifty delivered 1.6% consistently? Is this simple strategy actually going to help us be profitable or not? Let us try to explore this. If time permits, we are also going to try to dive in slightly deeper to explore what happens with the short straddle. So if you simply end up buying or shorting a short straddle, so what is going to be the end result? So let us explore this, and I have already backtested the results for the same, which I am going to share it with you. Again, I just want to emphasize on the point that this is just for educational purpose. Do not consider it as a recommendation. That is, if you take a look at it, on 28th of Tuesday, the Nifty contracts for the October month got expired, and on 29th, which is a Wednesday, so the new monthly expiry came, which is November. So what we are going to do is we are going to enter on first day of every single month, and we are going to enter somewhere around 9:20. So for this I have used the time as 9:20 because it is 5 minutes after the market opens, where some sufficient liquidity would have picked up. So At 9:20, we are going to buy the ATM call option. So whatever is the ATM of Nifty, so we are going to buy the ATM call option and we are going to hold it till the expiry. So there is no targets, no stop loss. We are just going to hold the same call option till the expiry. So these are some of the assumptions that we have made while backtesting. So why am I telling this? Just to make sure that everything is very clear. So again, the broader three assumptions is we are going to enter on the first day of the new expiry. So we are going to enter around 9:20 and we are going to keep it till the end of the expiry. So with these assumptions in mind, so now let us try to take a look at the result. So quite shockingly, if you take a look at it, this simple strategy has actually been profitable. So I have just put the estimated margin required and what is the overall profit that we have made over the period of time. But these are not to be taken at face value and let me explain about that a little later on. So overall, shockingly, it does surprise me that nearly 46% of the times this simple strategy actually has been profitable. So how is this the case? How is it possible? So let us try to explore about that little in detail. So nearly you have a 50-50% chance making money by simply buying a ATM call option. If not exactly 50, you have nearly 46% chance of making money by buying a call option. I have also added a 0.5% slippage to this entire calculation for us to get a better understanding. Not just that, by executing one lot of this strategy in Nifty, so you would have made close to around 3 lakh rupees, or to be precise 2,93,000 rupees over the period of last 6 years. So it does come surprising because option buying, which is not considered to be the greatest, is surprisingly profitable for nearly 46% of the times. And also overall at the strategy level, this has turned out to be profitable. So how is it possible? Let us try to explore the same. So to understand this, first let us make a basic assumption that we are going to invest 10,000 rupees every single month, or the capital that we are going to put in is around 10,000 rupees every single month. The first year in 2019, this strategy of simply buying a call option actually gives us a loss of 75%. So why is it 75%? When you take a look at it, in 2019, the markets didn't perform or go anywhere. So it was mostly flattish and this was a loss-making year where we didn't end up making any money. So in 2020, even though the first 3 months the markets came down, so later from April onwards, we started to see the markets actually rallied. So in 2020 alone, this strategy would have given us close to around 1,800% returns on our 10,000 capital. So the best part about this is during the COVID fall, for example, right? So you would have anyway sat at ATM irrespective of what is the amount of fall. Even if the market falls close to around 10%, 15%, 20 or 30%, your loss would be more or less capped. So that is one of the best parts of buying a call option where your downside is more or less capped. So if you take a look at it, 2020 is again a profitable year, a massive profit because we saw a fantastic up move starting from the month of April. So again, all this is being calculated on a 10,000 rupee capital. So in 2021, so the market did continue its up move and we made a mild profit of close to around 550%. So 544 to be precise. And 2022, again, as we know, is a very dull year. Market didn't go anywhere. There was Russia-Ukraine war and it was a complete year of consolidation and we lost close to around 179%. So here this 179% is a very, very big number because that is 2x of your capital. So even though you have made 10x of your capital or 18x of your capital previously, assuming that you had invested every single penny, you would have wiped out your entire capital and come back down, right? So this is one of the most important thing to note in option buying. So if you're compounding in option buying and one day, 1 year is going to take out 170% of your capital, it is going to erode away every single thing. So that's the reason money management is very, very important in option buying. So next again 2023. again a fantastic year. So we saw some really good rally beginning from April 2023. This year also turned out to be around 1200% return. Again in 2024, it was a very mixed year. So even though during the first half of the year, market did exhibit positive sentiment, it was not very bullish. So what I mean by this is the candles which were actually getting formed were not really big green candles, but they were small green candles where the market was just holding or slightly positive. And again, after the election, there was a big dip in the market, and post that in October, November, December, we again saw a big dip in the market. So broadly, this particular year, you can say, even though there were more number of green candles, so overall, the green candles were pretty small. It was more or less like consolidation followed by a fall towards the end of the year. So again in 2024 also, we ended up losing close to around 700% using this strategy. And finally in 2025, so the first few months didn't do well. Right now the strategy has started performing decently again. October month was a fantastic month where it went up almost close to around 5.5–6%, and this entire year has again turned out to be positive. So when you take a look at this entire thing, for example, right? So from the point of how exactly it has started and where it has ended, so the swings are wild. So there are certain number of times when this strategy actually performs really well when the market trends and does not do well when the market is consolidating. The best part about this is irrespective of the quantum of the fall, right? So you are not going to get hurt because you are buying a call option and your loss is going to get limited. So this is the overall idea of how this simple strategy of just buying and holding a month and call option has worked. So here is where we have to understand as traders the importance of money management and risk management. So while this strategy looks very good, so over the course of last 5 to 6 years, this strategy has delivered a total return of nearly 2840%. So this is the total returns that it has generated by holding or buying and keeping a call option. But the most important thing is this entire thing comes out with a maximum drawdown of 1700%. So we are all talking with a base of 10,000 rupees only. So just with a base of 10,000 rupees. So this has delivered a maximum drawdown of 1700%. That means whatever you have put, it is 17x the drawdown value. So this clearly shows that if you are buying option, so even if you are sure of the trend, option buying is a place where you actually have potential to make a lot of money or wipe out everything. So as a matter of fact, you must remember to go up in market, you have to climb multiple steps, but to come down, you don't have to work that hard. So the simple rule of compounding is if you are coming down by 10%, you have to recover 11% to get back your capital. If you are coming down by 20%, you have to recover 25%. You have come down only 50%, but you have to recover 100% to get back your capital. If you end up losing 90% of your capital, you have to recover almost close to around 900% to just get back your capital. So now is the real challenge. So that is, if you end up using all your money just to buy a call option with a hope that market is always going to go up, very likely you are going to lose all of it, right? So the drawdowns are very, very huge by just buying and keeping a call option. Even though this strategy on an overall level has turned out to be profitable, it is not so easily executable because it has massive drawdowns. Once you get 2 to 3 big losing streaks, so more or less your entire this thing is going to get ruined over there. You won't have any more capital to invest. So that's the reason as an option buyer, the risk of ruin is very, very high. So even though this might look like a profitable strategy, it is not possible to practically execute it because a single person cannot sit through so much drawdown at any point in time, and there is also a possibility of your entire capital being wiped out multifold, right? So it's not just one time or two times. So you can see 1700% drawdown is almost 17 times of your capital getting wiped out. So this is one of the biggest disadvantages in option buying. The risk is very high, even though the overall returns or overall your thought process of markets going up and you can make money from that is correct. So this is one thing which I wanted to bring to your notice through this video. So overall, the thought process of market is going to go up and you can make money by buying a call option is true, but buying a call option simply is not going to help us make money because the risk of ruin is very high. So this is the first point we should make a note of. And second one is, obviously, now if you think that okay, I'm going to bring a big amount of capital and execute only one lot, even over here overall you might end with a profit, but the total returns what you are making at a broader level is going to be very little. So let us say you try to execute one lot with nearly 10 lakh capital. So then you're going to make an overall return of around 28% with a drawdown of 17% over the period of last 7 years. So 28% return with somewhere close to around 17% drawdown over 6 years is not a great strategy at all. So this is not 27-28% compounded returns. I'm talking about 28% total returns, right? So given this, so option buying might seem very good, but the real edge for an option buyer comes from having the judgment about the trend. So simply going and buying an option, even though on paper might sound profitable, but in reality, while it comes to execution, it is not. So always make sure that before you actually go and simply buy the option, so you are aware of the trend and you are betting on the trend rather than simply betting on the probability numbers. So the entire probability game is not in your favor. As an option buyer, you must be careful about what you're getting into. So I think right now we don't have any further time to make a video on the straddle. So we will keep it for the next video. I hope you have enjoyed this particular video. If so, make sure you hit the like button, share this video with all your trading friends and follow Firstock for more. You can also check out Firstock's latest trading platform. It has everything that you need as a trader to get started with your journey. So make sure you check that out. And with this, let's catch you again in the next video. Thank you so much guys and see you soon in the next video.